Hey everyone. So, as you know, we have FOMC. The report will get released in 7 minutes, and then we'll have the conference at 1:30 p.m. Central. So the initial expectation is it should go all the way to the magnetic line. Whenever it goes close to 6610, we can take the profits on the iron fly, take the profits on the bull puts, and then we can wait for the meeting. Once the report is published, then generally, yeah, the expectation is we may see a big bounce after the conference. That is the main expectation. But to avoid any surprises, we want to book the profits on most of the contracts of Ironfly and also with the bull puts. We took 65, 95, and 6600 bull puts. So whenever price goes all the way up, we can book the profits on the bull puts. We collected nearly 220 to $240. So you can take maximum profits and hold few for as the free runners. So if price goes up at the conference, then you can make 100% on them. For iron flies also, we want to, whenever it goes close to this 6606 or 6610, that is where we want to book the profits. Because all this time it was moving choppy. If it goes close to 6610, we'll make nice profits, 30-40% profits. Or if it stays anywhere 6530 to 6590 range, by end of the day we'll be in profits. So mostly at 1 o'clock there can be a small drop or small bounce, but it will not be a huge. But after 1:30 there will be a huge bounce or a huge drop. So we can book the profits before 1:30 on the iron flies bull put, so we can hold for more time. For 1 p.m. we don't want to take any trades on ES or MK, but after, again, if you want to take risk, if you're okay to reset the accounts, then mostly it will be bullish. Yeah, if it is right by 1 p.m., if it is somewhere here, then we may see a drop. But if it is somewhere here, then we'll see a bounce even at 1 p.m. But yeah, 1 p.m. is more risky. Better we can wait for the 1 p.m. What happens based on that, we can take the other side. So TSLL is moving very good. So if anyone having TSLL bull puts which we got, they are making nice profits. You can book the profits on Iron Fly. You keep limit orders, right? Don't If you put limit orders, they will automatically get filled. The price is close to our bull puts which we got 65.95, 6600 is in nice profits. If you want, you can sell the bear call side. So huge profits on bull puts, nearly 80% profit on the bull puts. Take some profits on the iron fly because after 130 again, if there is a huge bounce. So we did 66.10 iron fly. Now it is close to 66. You can book the profits. Again, during the conference, we'll see a bounce. So before the FOMC it moved up, then again after the reported drop, again during the conference we should see a big move. So we can do 65.95, 6600 for this Friday. For coming Friday, you can take it for low risk. So we're taking bull puts for this coming Friday, 65.95 and 6600. You can collect around Also taking some bull puts for today. We're collecting around $210 for the same strike. If any of you have iron flies, you can take profits. Just take one contract with ES and let it run, expecting a bounce during the conference.
you hold in your heart. Because our business is helping your money mean so much more. Thrivent, where money means more.
Build a website you love with Wix. For your words.
In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor.
Higher than earlier in the year. Goods has picked up. In contrast, inflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year. It falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy is driven by our dual mandate to promote maximum employment and stable prices for the American people. Today's meeting decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. The obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. When our goals are intentioned like this, our framework calls for us to balance both sides of our dual mandate. The downside risks to employment having increased, balance of risks has shifted. Accordingly, we judge it appropriate at this meeting to take another step toward a more neutral policy stance. Today's decision, we remain well positioned to respond in any way to the appropriate stance of monetary policy based on the income data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. This is almost forecasts are subject to uncertainty, and they're not to be planned or decisions. Policy is not on a preset course. It has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans, We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum inflation. Thank you. I look forward to our question.
Great. Thank you. Chris Rugaber, Associated Press. As you know, Fed Governor Stephen Nyman has continued kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. Strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies scaring to eat the tariffs, and tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than inflation?
It's certainly possible. We were we have begun to see goods prices going through into higher inflation, and actually the increase in goods prices. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. It's also possible that there may be effects on unemployment, but I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I'm calling a curious balance. Typically when we say things are in balance, that sounds, in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Monroe for the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market is in very solid condition with strong job creation and all those things. I think if you go back to April and now the revised job creation numbers for May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risk between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel the policy is out of place and needs to move. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Colby Smith for the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility the labor market is at risk of weakening, or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just, trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you can think of this in a way as a risk management cut, because if you look at the S&P, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risk. Now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
The SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off periods of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risk
connection lost.
A little less, and that's partly because the labor market has softened, GDP growth has slowed, so I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low, it's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a whole percentage point above your target?
I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply. And we know that because the unemployment rate has ticked up. So that's what I meant by that.
For years since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028 or 2028. But that's writing down a rate path, which is designed to create over the course of the SEP limit too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to break down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that the effect, basically because of the effects on goods prices from tariffs like that, those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. The individual forecasts say that. You can't just assume that, though. right? We have to, our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation, we continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass through into where there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate should in the direction of what will we do? We'll do what we need to do, but we have two mandates and we're trying to balance them. For a long time, our framework says that when two goals are in tension, it's quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal. So, and then that's, we think about those things and we see, as you mentioned, we've been, our policy has been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of a more neutral policy.
About the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job.
So it's an interesting labor market, and obviously we think it's appropriate that we reduce rates so that we become more neutral, which presumably will be better for the labor market. You see, we're sort of more at the margins. So kids coming out of college and other people, minorities are having a hard time finding jobs. The overall job finding rate is a very, very low. The layoff rate is also very low. So you've got a low hiring environment. And the concern is that if you start to see layoffs, people who are laid off there won't be a lot of hiring going on. So that can very quickly flow into higher unemployment in a healthier, not a healthier labor market. There would be jobs for those people, but now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
So let's see, as you listed here, during rate cuts, you used the word recalibration. I think you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that it's sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is, it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the risks, at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
You're getting to my follow-up question. Is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
It is such an unusual situation, narrowly, when the labor market is weak, inflation is low, and when the labor market is really strong, that's when you've got to be careful about inflation. So we have a situation where we have two-sided risk. That means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about the different views for the economy. It's partly that, but it's also partly about what's the right thing to do in light of this, of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising to even have a pretty wide range of views based on, in this kind of high-level legal situation, and we do. So, we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right, it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years. But as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Right. Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everyone here is at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of does it help or hurt this political party, this politician? That's the framework, and I think people find it hard to believe that is not at all the way we think about things. Like I said, we're taking a longer perspective. We're trying to serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and people, their arguments, and we're having a really great discussion around these challenging issues. So,
See the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rates and what to do with the interest rates on data that seems to be, as you called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount. And I think the statistics really does understand this. They're working hard to fix it. It has something to do with low response rates, but it's also got to do with what's called the birth-death model. A good amount of job creation happens around new companies and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. It's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still good enough for us to do a move. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. But the other thing I'll say, quite low for the month or lower for the first month. By the time you get to the second or third month, still collecting responses from the prior month, and you get to the place where the big data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later. It's
well, for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. So there's a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
You know, we have to live life looking through the windshield rather than that rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today. Thanks.
Lack of employment rate in August was above 7%. The declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I hadn't say that I thought a quarter point would make a huge difference to the economy, but you got to look at the whole path of rates, right? And the market's has already been baking in expectations. Our market works through expectations, right? So I think our policy path really does matter, and I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that you see minority employment going up. You see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market's weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year is probably and we see that the labor market is but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're unusually amounts of economic activity through the AI build out and corporate investment. I think how long that will go on, no one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is it's moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still low unemployment rate. So that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I'm not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Bank system, the Federal Reserve System, and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with this. And we have to do our jobs better.
Not an independent review?
We're certainly open to always trying to do better.
Chairman Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, high productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. So the particular focus on young people coming out of college, and there may be something there. It may be that companies or other institutions that have been hiring young people right out of college are able to use AI that more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things, but yet it's probably a factor. Hard to say how big it is.
Thanks. What evidence do you see of tariffs showing up in inflation?
Well, you can take goods, just sort of the broad goods category. And last year, goods inflation was negative. 25 years, that was the typical thing, was that goods inflation goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high. We had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have different views, but we think it's contributing 0.3 or 0.4 or something like that to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, through has been small. It's been slower and smaller than what we thought, but the evidence is very clear.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is through this framework of politics and of what party is being held, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of, the forecast that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
There's 12 voters, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really. The only way for any voter to really is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really based on the data and your understanding of the economy. That's really all that matters, and that's how it's going to work. And I think that is the way the institution, if that's in the DNA of the institution, that's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It would be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you had about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
I think there's quite a wide assessment that situations change with respect to the labor market. Still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now reality, and there's clearly more downside risk. So I think that's broadly accepted, and so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see in the dot plot. So that's just the way it is. I mean, people have you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. So it's not a bad economy or anything like that. We've seen much more challenging economic times, but from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore our eye on. And you will see that there's a range of views on what to do. None of them today at the meeting, and I think it was a high degree of unity.
Thank you. The Economist. You mentioned earlier that job creation is running below your calculated break-even rate. So I'm just curious a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect, but it's clearly come way down. You could say somewhere between 0 and 50,000, and you'd be right or wrong. But anyway, different ways to do it. So wherever it was, 150,000, 200,000 months ago, it's come down quite significantly. And that's because very lower amount of people are joining the labor force. The labor force really not growing much at this point, and that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far. Except now we do have inflation, unemployment ticking up inside just one tick outside of the where it's been for a year. 4.3% is still a low level. But, I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
May, you mentioned the downside risk to employment amount, but it's great that measure the kind of activity and output for the third quarter, those that we have. Now it's very strong. You mentioned strong PC. The upside risk to the labor market if better activity is all right.
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in. It's a good bit from consumption. It looks like consumption was stronger than expected. What we got earlier this week, I guess. And also we're getting, fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So, we watch all of it, and I was median for growth for this year actually moved up in the S&P between the June and September S&Ps. And really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that the focus of today's decision.
Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's a very when pandemic hit, rates to zero. Housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we went so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help get builders more supply. And so some of that should happen. I think most analysts think that we have to make big changes for it to matter a lot, for the changes in rates for it to matter a lot for the housing sector. And the other thing is, by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and I think there's a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people. All of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out. So that's where it is.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate policymakers lacked conviction about their projections. I'm wondering if you still feel that way.
Forecasting is very difficult even in flat times. And as I mentioned before, forecasting is a lot with much to be humble about. So I think right now is a particularly challenging time, even certainly than usual. And so I don't know any forecaster anywhere really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet than cause the unwinding?
Well, I think we're the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in abundant reserves condition, and we said that we would stop somewhat above somewhat above an ample reserves level. That's what we are. We're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant economic effects. These are pretty small. Not very large. So I wouldn't attribute macroeconomic consequences to that.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. Moderate long-term interest rates have to be understood when we see the 10-year economy moving. Rate cuts or balance sheet reductions affect the long end of the yield curve.
We always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, and maximum employment. So we haven't thought about that for a very long time as third mandate that requires independent action. So that's where, and there's no thought of considering that considering that we somehow incorporate that in as something in a different way.
Yeah.
Down this year by 2 points, the most since 2009 during the Great Recession. And delinquencies are high for car loans, personal loans, credit cards. I'm concerned at all about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. Default rates have been ticking up, and we do watch that. They're not at a level. I don't believe they're at a level or over. They're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have a visible effect on that, but over time, strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
Well, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a rate
Our goals are maximum employment and price stability, and so we take the actions that we take with an eye on those goals. We monitor financial stability very, very carefully, and I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in shape in the aggregate, and I know that people at the lower end of the income spectrum are under pressure, obviously, but from a financial stability perspective, we monitor that picture. We know that there's a right for asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities, and I would say those are not elevated right now.
What are you for the last lesson? Hi, Chair Powell. About inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So, as you said, shorter-term inflation expectations have tended to respond to near-term inflation. So if inflation goes up, inflation Longer term, it's both break even in the markets, and almost all of the longer term surveys, which have been doing a bit of an outlier lately, have been just rock solid in terms of
Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
So, right, price touched our low of the day, exactly to the S8, and then bounced all the way to the top. Bull puts which we got for today and also for Friday will make nice profits. So if you took for Friday and for today, you can take some profits on them, keep 20%. So we collected nearly $240 to $50 for Friday and also for today's 65.95, 6600 bull puts. And the price, if it closes around 66.10, 66.15, then we'll also make huge profits with if any of you are holding any of one or two runners. We took profits on 80%, holding 20%. And then they will also make huge profits. 66.10 is our pin price. Yeah, Naveen, do you have any questions? Yeah, Naveen, I can't hear you if you're talking. Yeah, Anil, do you have any questions? Yeah, Datta, do you have any questions?
Yes,
Yeah.
regarding the lift calls for Friday, should we hold those or is it better to close?
Yeah, hold them. Tomorrow you can see more bounce in the market. Overall, there
And
is
another
nothing.
question. So, okay, got it. So another question regarding SPX. So during every Fed meeting, do we have this kind of volatility, like 30 up and 30 down?
Yes, yeah. Every Fed meeting will have it. Generally, yeah. We did not take it, but if it touches this S8, that is the best time. If you buy a lotto here, that will make 1,000, 2,000%. It came all the way to the bottom, exactly touched the S8 level, and then it went all the way to the top. If you see SPX.
Got it. Okay. Yeah. Thank you.
Yeah, generally either it will go all the way to the top or it will come all the way to the bottom, and then there will be a huge bounce. Yeah, Naveen, are you there? Yeah, AK, do you have any questions?
Sure, sir. Is it safe to get the iron condor now or?
No, you can get the bull puts. You can go and do bull puts for Friday.
Oh, okay. I got the
But
bull
either,
put for Friday for
yeah,
6,590 and
iron
6,595.
condor, it may go till 66.25. You can go above 66.30 and do bear calls. You can go below 65.90 and do bull puts.
Can you repeat that, sir?
Yeah, below 65.90 bull puts.
Okay.
And above 65.25 you can do bear calls.
Okay. Thanks. Thank you.
Yes, Santosh.
Hello, Kishore. Can we average left hand? We took at 88. Currently, it is 54.
Yeah, let me check it. $22.99, $23. Yeah, you can add a few more contracts.
Okay, thanks, Ali. Thanks for your time, Ali.
Sure. Yeah,
Yeah,
Vinny.
sure. Regarding this iron fly, when you say to take profit, like put the order for complete iron fly, and you mentioned when the price is up, take the profit on the bull put side, right? So, but the spread is very big and it seems very risky to do that too. So, just want to know what's the best way to close it.
No, right. Your risk is minimum because, for example, if it dropped when it dropped all the way to the bottom, then your bear call already would have made huge profits.
Yeah,
Right. For example, if you collected $2,400, then your risk is only 600 overall
overall 600.
on a 30-point spread because either it will stay above that 6610 or it will stay below 6610. One
Oh,
trade definitely you will make profits.
do you prefer like closing it like complete order or going one side and closing it? What do you suggest?
So closing all at one time is low risk.
Okay,
Yeah, but if you want to take more risk and more gain, so then yeah, you can whenever price drops to the bottom, you close the bear call side,
okay.
right? Because the bear call side might have will give you full profit, right? It is basically a combination of a bear call and bull put.
Yeah, yeah.
Right? What we are saying is it will stay below 6610 with the bear call. So then you can close that. And then when price is again comes back to 6610, now you can close the bull put.
Okay, sure.
Not, yeah, if you want to take low risk, you can just yeah, keep it like that. And if it closes around 6610, you will make 100% profit by end of the day.
Okay, yeah. Thank you.
Yeah, yeah, Melissa, do you have any questions?
Yeah, Kishore, Garu, am I audible?
Yeah, please.
Yeah, I just wanted to check on the bull put for this Friday, 6600, 6595. Can I still enter now? I haven't entered until yet. It is showing $180. Oh, now it is 450. Wow.
You can collect 450 now or
No,
bull?
I think I already gave a call for bull puts, but I did not enter. But I was just thinking to enter it, but it went high, very high at $450 now. So do you think it will be moving up or for next tomorrow?
No, are you collecting 450 now or how much you are collecting if you collect now?
If I
Because
collect now, it is showing 450.
if you can collect 450 on 5 point spread, you can do it.
Okay,
But I
so
don't think you can collect 450
uh,
because
now it
yeah,
went,
if
went
you
went down to 180 now.
right, yeah, that's what because we collected around 250, 260. Yeah, but yeah, it can still, it looks bullish.
So I
So
can
as
enter
long
your saying.
as, yeah, you can enter and close tomorrow morning.
Okay,
Yeah,
okay,
overall, it is bullish. So tomorrow also, if it goes up further, then you can keep all that $180.
okay, sure. Kishore, Garu, thank you.
Mm. Yeah, Naga, do you have any questions?
Sorry, I was talking on the mute. Regarding the Oracle spread, which we took, um,
Yeah, we
week and
can hold now.
315,
Yeah, by
do we need
tomorrow
to
when we
average or we can hold it?
yeah, we'll hold it tomorrow because overall market is bouncing. So TSL will also bounce huge. Oracle also can bounce tomorrow morning. We can hold it.
Thanks. And
Yeah,
and lift also we are holding, right?
yeah, we are. Yeah.
Okay, thank you.
Yeah, Ravi, do you have any questions?
Yeah, hi, Kishore. I have the same question. The Oracle,
Yeah, we
how
are
did
holding it.
as well
We
as
are
the
holding.
calls?
We are holding until Friday.
Because like I have a large position on the Oracle calls. So is it better to average a little bit or just leave it with the whatever the position I have it?
Yeah, just leave it here. Never increase too much position size. Just
Okay.
try to use consistent share.
Yeah, because
That
like I bought it for like a 9, now it's almost like a $1, so that's fine.
right, yeah. But yeah, tomorrow it will bounce again.
Okay.
So overall bullish. We got a pullback. With market bullish, tomorrow it will make a nice one.
Got it, Kishore. Thank you.
Yeah, Bunny, do you have any questions?
Yes, Kishore garu. So regarding, sorry, the IWM butterfly, we need to close before the market closes Sunday, or do we need?
Yes.
Okay, so
Yeah, just to avoid stock assignment, better to close.
yeah, good to close now, and still want wait like 5 to 10 more minutes.
We can wait another 10 minutes. It will make more profits.
Okay. Same with XPX butterfly also. Like let's wait a few more minutes.
Right. Yeah.
Okay. Yeah. Thanks.
Yes, Anuj, do you have any questions?
This is regarding some Oracle. Can we keep or can we roll it to the next?
Yeah, for now we can keep it. Tomorrow, if we don't see a bounce, Thursday we can
Okay,
roll to
that's
next one.
closing. It will be a little. It will be going down. So,
Yeah,
okay.
but your theta decay, those will also give you more profits. If it can even come to around 310 price, it will
Okay.
make.
Okay. Thank you.
Yeah. If it closes around 66.10, that will make nice profits with butterfly. Will make nice profits with ironfly. You want SPX to close around 66.10.
And
Yeah.
any trade for tomorrow?
Tomorrow we can
Meaning
do.
the way you did yesterday, like for today, one before. So anything for tomorrow you want you.
Yeah, mostly we'll have a gap up tomorrow morning.
Okay.
We can do 65, 90, 95 bull puts for tomorrow.
Okay. Please post it so that.
Yeah.
Hi, Kishore. Naveen here.
Yeah, I know. Yeah, please go ahead, Naveen.
Kishore, are you able to hear me?
Yeah, I can hear you. Please go ahead.
Kishore, are you able to hear me? Oh, I'm not able to hear you back.
I think there must be some issue with
Okay.
your
Yeah, I'm able
microphone.
to hear now. So this iron flies, Kishore. So yesterday we discussed like better to close them before 1 o'clock. So I did close them with only probably 100 or 150 margins. Do you
Right.
think like is it still better to enter now for a quick
Mm,
couple hundred bucks?
yeah, you can do for tomorrow. Yeah, I'm checking something for tomorrow. I'll post for tomorrow.
Okay. But yeah,
Uh,
these things had made good profits actually, good margins. I closed it before the call and got into other calls. Yeah.
yeah, that is fine. Yeah, profit is profit because
Yeah,
because if the call suddenly it talks very bullish, then price can go up so huge also. So
that is true.
I took a risk in personal account. So
That's a good risk. Yeah.
because
But good
expected.
calls, very good calls. Yeah.
Mhm. Yeah, Madhu, do you have any question?
Yeah, Kishore garu. The iron fly for Friday, the same strike at 6610. That's a 25 point spread one. Still can be entered. It's showing or a bit the price between 2150 and 22 now. Hello.
Yeah, you can enter bull put for Friday.
Okay, not the iron fly.
Iron fly better we because there might be a bigger bounce tomorrow. Let's watch tomorrow morning and enter the iron fly. For now, you can enter the bull puts.
Okay. Okay.
65.95, 6600 bull put and collect the premiums.
Yeah, it's showing around 220.
Yeah. Yeah. So tomorrow, if it uh, tomorrow mostly you will see a nice gap up.
Okay.
If it gaps up, then you can make nearly 40-50%.
The one we took today, it was 25 point spread, right? That's a 6610, 6635,
Right.
6.
Yeah. Yesterday we took 30 point. Today morning we took 25 points. But yeah.
Yeah. Yesterday I took that was a good one, but today I couldn't hold longer, so got little panic and but still at the end I just exited with a little profit, but I wanted to like exit it now, so it's 10-ish it's showing, but I wanted to exit this point. First, I put this stop limit, I mean, this limit price, but after that, I just,
Right. Yeah. We collected nearly 25 yesterday. So today it is at $10. So that is nearly $1,500 for each contract. Today morning we collected.
yeah, yesterday I mean, the same one I entered, but second iron fly, I didn't take that one yesterday. Um,
Yeah.
Release expiration, something. Yeah. Yesterday only I took. Yeah, that was a good profit. Yeah. Yeah, good one, Andy. Yeah. I will try this bull puts.
If we focus on iron flies, they will make nice profits every day.
Yeah, Nadi, the PDT, so that's why I couldn't take more trades. only 3 for week, 5 days, right? So that's why.
Yeah. Okay.
Mhm. Yeah. Thanks, Andy.
Sure. Priya, do you have any questions?
Hello,
Yeah, Priya, please go ahead.
Kishore garu. I'm actually facing issue with trading view అండి. నాకు అది ట్రేడ్ బటన్ రావట్లేదు.
Yeah, please
I
join
don't
setup session. Join Wendy 6 p.m.
6 p.m. Okay అండి.
We'll help you during that. Yeah, who is iPhone?
Yeah. Hey, Kishore, this is Venkat.
Yeah, okay, please go ahead.
Yeah, I have two questions actually. One regarding the event. Um, the rate cut is a positive news for the market, but after the news at 2 p.m. EST, it went down, right? So why was it? And after, I mean, during the meeting, it again went up. So I would like to understand like what was the phenomenon behind this down and up moment.
Yeah, so yesterday itself, I told you, right? Generally, that's what happens on any FOMC day. Generally, you'll see a bounce or whatever happens initially, then there will be a drop, and again there will be a bounce. Those three things will happen. So generally, right, initially the news was positive. Then when
Mhm.
conference started, he was little negative, or he was not right very positive about future rate cuts or positive about. So based on his tone, based on his answers to the questions, the
Mhm.
market will generally, yeah,
Okay.
move up and down. But yeah, overall, yeah, market basically bounced back, and and we want to capture that volatility. When you take
Mhm.
the iron fly, when it goes up and down, if you buy naked calls or puts, you will lose. But with iron fly, basically the time we crush, peak, decay, all those will help you to make nice profits.
Yeah, yeah. I missed your session yesterday. I'm sorry about that. That's the reason I asked this question now. And I took the iron flight today, and I made not, I mean, great profit, but I think couple of hundreds. That is good. Because I got panicked, and you said like we can exit, right? So I exited early, but it went down so much in the bear calls. Like there would have been more profit, but that is fine. Um, my another question is I have shorted NVDL. So can I hold it for tomorrow or until Friday? Is that fine?
Yeah, you can hold it. Yeah, there might be a gap down on individual tomorrow.
Oh, okay, yeah, that should be great. Yeah, thanks, Kishore.
Sure. Yeah, Atul, do you have any questions?
Yeah, Kishore, I just wanted to ask, like, should I get out of that iron fly or not? But I got out.
Yeah.
I would like 10K.
Yeah, sure. Yeah, Ajay, do you have any questions?
Yeah, Kishore, can you hear me?
Yeah, please go ahead.
Yeah, so Kishore, I was out for a bit. I was actually previously trading the futures and was attending your sessions, right? And then I had a vacation, and then I didn't join for a while. But now I see the mainly we are doing options and Ironfly in the chan, and then this one also I'm seeing that. So did we like, are we still doing the futures or
Yeah, we are doing futures in the evening time. When volatility is too high, we are mainly taking advantage with SPX trades and other trades. In the evening time, when volatility is less, we are trading futures.
Okay, so I probably missed this. So this is a different, like, basically strategy. I've never tried this Ironfly. So I'm assuming we have some. So I was like out a couple of months. So basically we have some training on this one.
Yes, yeah. I did some trainings over the last weekend and shared the trainings. Yeah, basically, whenever you think market is completely choppy or you see a lot of big volatility up and down, this Ironfly will make profits.
Okay.
Yeah, it is a low risk strategy where the market goes up, down, whatever it is, with the theta decay implied volatility, we can make nice profits.
But this one we can't use the prop firms, right? Or can we?
No, you have to do it in your personal account.
Personal account. So only futures we have the
Yeah,
flexibility. Okay.
futures. Yeah.
So this one, which one do you think? Should I stick with futures or should I? Because even today I was trading futures only. Should I, like, is this more compared to futures? I mean, I was trading in Q mainly. Compared to that, is this a better
Yeah,
one?
again, right? If you have your personal account, if you have money, then SPX, if you trade properly or if you trade with proper strategy, proper rules, then yeah, this will make nice profits every day. Futures is or prop firms is where if you don't have a personal account or you don't want to risk your own money, then yeah, but it will take some time because prop firms will come with lot of rules and regulations. You cannot hold the trades for more than a day like that. So it takes time for practice. But yeah, once it may take for some members it may take 2 3 months. Some members it may take more. So it is based on that. So you have to see which one is good for you.
Yeah, I'm using the Take Profit Trader, and it's working good. I mean, I actually make some money, then sometimes, and then finally blow up account again. Pass, like it's having, but overall it's positive, right? So I think that is working good. So I'm just so this is probably another strategy we can add on, but like this needs a personal account for that, right?
It is right. Yeah.
Okay. Okay. And the indicators, do we have to subscribe different indicators for this? Sure.
Yeah, we have set of indicators which will help you for mainly SPX trading. There are some indicators which are mainly for stocks and options. There are some indicators which are mainly for futures for prop firms like that. So yeah, based on which you want to trade, you can select those indicators.
Okay. I'll check the training on this one. It should be there on the channel, right? I'm the RCA, I'll go bot alerts. That's the one that I'm.
Right.
Okay. I'll check that for the training. Okay.
Yes.
Thanks.
Yeah, Vijay, do you have any questions?
Yeah, Kishore. Hey, quick question on UNH. So I was following UNH and I see it's been down for 2 days. I was looking for a long opportunity. Can I buy some stocks or go long on UNH now after 2 red days on UNH?
Yeah, let's wait until 3 p.m. and then launch.
Awesome.
Mm, 66. Yeah, your bull puts, whatever you got, 100% on those bull puts for today. We got 65, 95, 6600.
B, okay. Go.
So, if anyone holding the puts from today morning, nearly $1,000 on each contract. Yes, everyone is moving good. Yes, Sandeep, please go ahead.
Hi, Kishore. This is Sandeep.
Yeah, please go ahead.
Hi. So whenever you say ironfly and butterfly trades, so for example, if the spread is $25 on each side, so what's my exposure?
2,500. So basically, yeah, whatever is this, because one leg definitely you'll make profits. If it closes exactly at that point, then you'll make full profit on both the sides. But your maximum exposure is 2,500 is the maximum risk.
Okay, so because on Robinhood, actually, I'm not finding these options. If I go with two different trades, so each side I'll have exposure to 2,500, right?
Mm, But still, one leg you will definitely make profits, right? If you are doing, for example, 6610 is your midpoint. You are doing a bull put below 6610. You are doing a bear call above 6610. So either you will make profits with bull put or you will definitely make profits with bear call.
Okay,
So
so
even
that
though you
means
take
whatever is the
put,
difference.
yeah, whatever is
Okay.
the difference, that is the max risk for with the combination of both the trades.
Okay, for example, on one leg it's $11, on the other one it's $10. That means 100 is my exposure.
Mm. No, whatever is right, if you're collecting $1,100
Mm-hmm.
and if 15 points is the difference, then 400 is your max risk. If you make, you will
Okay.
make 5,600 or 1,100 if it exactly pins at that point. But yeah, your profit, you can make more profits.
Okay. Because on Robinhood, I'm not finding these options. I'll have to go with two different rates. Okay. Thank you.
Yesterday, somebody was telling you can do custom or something. Yeah, I never used Robinhood.
Oh, in Robinhood?
No, I never used Robinhood. Yesterday, some member was telling you have something like
Oh, okay.
custom trading. Yeah. Or you need to have level 3.
Okay. Thank you.
Yeah, sure.
And I have one more question about Oracle trade. So we do
Yeah,
have
we are
those bull
holding
puts,
it.
right?
Yeah, we are holding. Tomorrow, mostly it should move again, move up, make
Perfect.
nice profits.
Thank you.
Yeah. Srini, do you have any questions?
Hey, hi Kishore. I have one question actually. So, are we still holding both the Oracle as well as the Lyft,
Yes.
both of them,
Yeah,
or okay,
we
okay,
are holding it.
okay. Thanks, Kishore. Yeah. And did we have any BNB for tomorrow?
For SPX, so it did not give anything. Initially, it was showing something like a bear call, but it disappeared. So that's why we did not take anything.
Okay,
But,
no.
but for other stocks, it is showing like for UNH, it is showing bullish. It's a gap up for UNH. You can have a gap up tomorrow.
Mhm.
If it shows at the end, if it shows, then there will be a gap down.
Okay.
In the last half an hour, if it shows a BNB, that means tomorrow UNH can bounce.
So we are still holding
TS,
both of them, right? Actually, Oracle and as well as the Lyft shares.
right, yeah.
Okay.
TSLL is also looking bullish for tomorrow.
Okay. Thanks,
Um,
Kishore.
sure, yeah.
So Lyft is also showing bullish for tomorrow.
No, it was showing yesterday, but yeah, we missed that.
Okay.
Yesterday we got a BNB and then there was a huge gap up. Yeah, as of now, it's not showing. But yeah, if market is overall bullish, then all the stocks will move. Oracle, Tesla, lift everything to me.
Okay. Thanks, Kishore.
Kishore, can you check DVA? DVA. Is it right time to enter for stocks at least?
This is the right time. $125 is the right support. As of now, it is still bearish.
Sure. Thanks. Thanks, Bishop.
Mm.
And I took profits on Netflix. Here. Thanks.
Good. Yeah, it bounced well today.
Yeah, I took that $1,500. I bought it at 1050. So yeah.
Yeah, cool.
Thank
Yeah,
you.
Tarkesh, do you have any questions? Oops, sorry. Yeah, please go ahead, Tarkesh.
Yeah. So the futures trading you mentioned sometime before, I've not done it till now. So I was just wondering, what time do you do the trading? Like the hours that you do the trading, if I want to sign up for it?
Generally, we have a live session between 8 p.m. Central, 8 p.m. CST to 9 p.m. CST. We do live for futures trading.
Okay, so it's 1 hour, and does that include the prop accounts at that point?
Generally, we take trades in the proper account during the time.
I'm sorry, your voice was not clear.
Yeah, we take trades in the prop accounts.
Okay, I'll look into it. So I use the crypto bot to sign up, or which one is it?
So yeah, if you sign up to the bot, you will get invite to the sessions in the evenings. If you
Okay.
get indicator subscription, then you will have the indicators. You can, once you learn, then you can trade whenever you want.
Okay. I'll maybe start with the bot for now and then do the indicators once I understand it.
Sure. Yeah.
Okay. Yeah. Thank you so much.
Yeah, Raj, do you have any questions? Yeah, Raj, we can't hear you if you're talking. Yeah, your voice is breaking.
Okay, let me reconnect.
Yeah, it is still breaking.
No.
The next one. You can connect and connect back. Yeah, SM, do you have any questions?
Hey, Kishore, can you hear me?
Yeah, please go ahead.
Oh, thank you. Two questions. How do I subscribe this? Is it through the Telegram?
Right.
Okay. Which group is this called?
So again, we have different subscriptions. One is if you want only options alerts, you can get the options alerts.
I'm already on that. Yeah.
Yeah. Then if you want the indicators, you have to go to ninja underscore apex underscore bot. That is where you can get these indicators. If you want SPX indicators or prop firm indicators, whichever you want, you can get. So you
Okay.
can trade whenever you want.
Ninja Apex dot bot. Okay.
Yeah, I
Gotcha.
posted in the Zoom chat. Yeah.
Awesome. And one last question. This is Trading View, right? The platform you're showing.
That is right. Yeah.
Okay. This Trading View, can I connect? I mean, with Charles Schwab, I can directly connect to my Bank of America and move the money, right? Is it same here, or is it
No,
different?
TradingView is just a chatting platform. It is not a brokerage. So you have to use brokerage like Thinkorswim or IBKR or Tradier, TradeStation, and then you can connect Tradier or TradeStation directly to this one.
Okay. But not Charles Schwab, Thinkorswim
No,
or
no.
anything. Okay. Okay. Thank you.
Yeah. So
Kishore.
yeah, please go ahead.
So same thing, I think you already addressed about Robinhood. So I was doing in 2 legs with Ironfly, and what happened is I got 10 contracts on 1 leg, but only 3 got assigned on the second one because of the 2 leg thing.
Oh, okay.
So it was a little messy while SPX going down and going up. Do you recommend any other trading platform to use to make it easy?
Yeah, as of now, I am using Tradier. I'll give a tutorial tomorrow or something. Yeah, that is easy to place iron condors or butterfly, ironfly. Like you can right click and it will give you an option. You can select whichever you want.
I think
So
it is better.
yeah,
Repeat which platform you said?
it is Tradier, Tradier.
Tradier. Okay.
Yeah.
Yeah, please. I think that would be super helpful.
Should be. Yeah.
Thank you.
Sanuj, do you have any questions?
Yeah, that was also my question. If you can make a quick demo in this time, 3 o'clock. But
Yeah.
Tradier,
Tomorrow I'll do a demo during
Tradier
live session.
or another one which you mentioned, trades, something, whatever,
Right,
easily
yeah.
integrate with.
Yeah, I'm using Tradier. That is easy to place these these advanced option strategies. That is better. So tomorrow using my personal account, I'll do a demo.
Okay. And second thing is that whenever you're posting after that, when I do or something, it's always lags. How can we mitigate that? Because by the time you post, then we mimic and
Yeah, generally in the live session, whenever I see opportunity, I'll announce it immediately and then I take a trade and then I post it. So if you are in live session, you can listen and you can immediately take the trade.
okay. Because same thing like when doing it, I could not do two. I mean, same iron play in one single shot. I have to do one like full put plus beer calls. At that time, it all goof off.
Yeah, I'll show it how to do it tomorrow.
Yeah, thank you.
Yeah, Rajesh.
Yeah, Kishore, can you hear me okay?
Mm-hmm.
Okay. So I'm not sure if I missed the butterfly one, which we took today, right?
Right.
Yeah. So what was the outcome for that? So now it is ended at 6600.36, right? SPX.
Right. So what are the other legs we got?
I think let me check that.
I think that was more like a hedge. So suddenly, if there is a huge move on either side, then butterfly would have made huge profits.
Okay.
Either if it goes down all the way.
Yeah, we bought 6570 and 6630 on the higher side. On the lower side, it's 6600. So it's a debit spread, right? It's a debit spread, right?
Right, yeah. But yeah,
So
basically that we have to take a loss on that, because either if price moves somewhere to 6570, that would have made huge profits, because we sold this and we bought the butterfly. So if it either goes up to the top or if it drops to the bottom, then that butterfly will make huge profits. Whereas ironfly, if it stays at the same price, ironfly will make more profits. So because we had multiple ironflies, we took a
okay,
butterfly as a hedge. So if SPX goes suddenly, if it bounces during FOMC or it drops, and if it stays here, then because we sold this, we bought the puts. Those puts will make huge profits. Or if it goes all the way up, the calls will make huge profits.
okay. Yeah, I took one contract, which is a debit, okay, around $8.2. So what will be the max loss here?
Well, you will get around, because I closed at 6600.36. Yeah, max loss will be around 750.
Okay.
Yes, but did you not take the iron fly?
Yeah, I took ironfly, but I closed it in the morning, so it was around $22. I took 23.75 around. I could have been kept it till last. So because of market fluctuations, I closed it. But somehow I got a gain in that. Yeah. Yeah. And also I took bull put around 6595 and 6585, 6590 by today expiry. I think it got
100% credit on that.
yes, yeah.
That's good. Yeah. So generally, next time, whenever price goes to the price goes to the bottom, generally we can go and take the today, because of the conference call we missed it, but when it went all the way to the S8 during events, if it goes to the S8, then if we get a lotto, then if we buy a call here or even a debit spread or something, that would have made a huge, nearly 2000, 3000% profit, because from 6550 within 10 minutes it went to 6600.
Yes, that's right.
Next time we can catch those things. Either if it goes all the way to the top or all the way to the bottom, then there will be immediately the big companies will push it up.
Okay. Yeah. Thanks, Kishore.
Sure. Yeah. Venkat, do you have any question?
Hi, Kishore. Do you mind telling what the BNB gave for SPX for tomorrow?
We did not give anything. That means it is neutral.
Oh, okay.
So yeah, yesterday it gave a sell signal. Today morning we had a drop. But for tomorrow we don't have any signal.
Got it. Yeah, I mean, the
That
reason why I'm asking this is in 30 minutes time frame earlier, right? And the price pulse we're basically in between two big blocks, and we touch both the blocks here. And at the same time, on NQ, we are at a 1 hour resistance, big resistance actually. Do you mind switching to NQ, please? With price pulse. Yeah, in 1 hour time frame, we have a big sell order block here. We are right at the block right now.
But it came to the bottom. Mostly it may break the resistance. We may see it price going all the way to the top again.
Okay.
To
Yeah,
640s.
Even in 5 minute time frame also, we have two very big swing order blocks sitting there. Yeah,
Yeah, but
27,000.
today evening mostly we'll see 550
Okay.
because rate cut, all those things happened. So mostly it will be bullish today evening, and tomorrow we may see a little gap up. It will not be huge, but there can be a small gap up on both the speeds.
Got it. Yeah. Thank you.
Sure. Yeah, Tamil Selvan, do you have any questions?
Yeah, hi Kishore.
Yeah, please go ahead.
I have one doubt. So which platform is good for SPX? I think you told once, then I forgot it. Currently, I use the Tasty Trade, and
I'm using trade here. It is yeah, okay. Yeah, the rate fills are little less, but the usability is good. Tomorrow I'll do a demo. I'll show how I'm taking quickly the iron condors or iron fly, all those things.
yeah, Tasty Trade is very good actually. So I have been doing it for a year.
Mm.
Problem
With
is,
with iron fly, the advantage is you can pay $30 per month, and they charge you very less for commissions.
yeah,
You
that
don't
is.
need to pay.
So you said like we pay some monthly fees or something, then they
Right.
reduce the cost, right? So is it
Mhm.
for which one? Trade year?
Right.
Okay. Okay. So is the filling and everything like
Yeah, it is
uh,
good. Yeah.
it is good, right? So how
Mhm.
about adding a stop loss there? Is it good for adding a stop loss for spreads?
Generally, yeah, stop loss is little not easy. You have to
Okay.
manually do it. Thinkorswim is good for the stop loss placement. Here you can put the targets, but not the stop loss. It is not easy to use.
Oh, okay. So there is
This
no
one.
stop loss at all, or like
No, you can add, but it is not easy.
okay, okay. So but with this is like we can create a bracket order, either stop loss or
Right,
profit.
right.
Which one
Yeah.
hits, then it will close.
Mhm. Right.
Okay.
Yeah.
And one
Tomorrow
more.
I'll do a demo on that. Yeah.
Okay. So I was reading some article, and they were saying, let's say if we are taking any spreads, let's say we generally take 5 point
Mhm.
wide spread, right? So the only for flies, we take 30 wide, but generally we take 5 point wide spread, right?
Right. Mhm.
But what they are suggesting is let's take OTM, let's say like a 10 wide example, and instead of generally opening either one side bull put or bear call, mostly try to open iron condors. And
Yeah, basically, iron fly is nothing but an iron condor.
yeah. But what I'm saying is actual iron condor instead of going with the same stripe. And let's say if it goes to opposite side, and they are saying only close or add a stop loss for only short orders. So whichever we have for the long one, just there's like saying to keep it. But will it be profitable if we do that? Just adding a stop loss. Let's say I added a iron
No,
condor.
all right. Yeah, yesterday I explained. Basically, iron fly strategy is much low risk compared to iron condor strategy.
Yeah.
So yeah, because you collect more premiums, your risk reward will be 1:1. Whereas with iron condor, it will be yeah,
If it
your
is,
risk will be double than the reward. So if you win 4 times and lose 2 times, then you'll be neutral again. So
yeah.
iron fly is a better strategy.
Oh, okay. No, even in iron condos, let's say, so they are saying add as, for example,
Yeah,
we
yeah,
are
you got it, but yeah,
that is not advisable, you are saying?
yeah, that is not advisable. Yeah, it will add more risk.
Okay, okay, yeah. Thanks,
If you
Kishore.
are closing one leg and keeping other legs, that will create more issues.
Yeah, okay.
But anyway, yeah, we'll discuss later. Yeah, I have to
Yeah,
go
instead
out.
of max loss.
Yeah. So if
Okay.
anyone has any questions, please join at 6 p.m. for setup session. We'll answer them. Yeah. Bye, everyone. So with iron fly, definitely it is working very good. Every day, easily $400-500 we can make with one contract. So yeah. Okay. Okay.
Kishore, I couldn't find Ninja Apex bot.
You have to go to Telegram and just put ninja underscore apex underscore bot. Just copy paste that in the Telegram search button.
Okay.
Kishore, one last thing. I was looking for that to join in the options thing.
Mm-hmm.
So
You,
what do you
you,
for that?
you can go to options underscore PREM underscore bot.
Okay.
Yeah,
Okay, thank you.
sure. Okay, bro. Talk to you in the evening. Bye, everyone.